One of the biggest lies that banks tell us is that our money grows in our bank accounts. The truth is that while money does grow in numbers due to interest, it doesn't grow in value or real terms, with inflation skyrocketing and bank interest rates lagging far behind. Keeping cash in the bank is actually like burning a hole in your pocket. In this video, I will give you 6 assets that will stop this wealth erosion and help you create intergenerational wealth. Number 1, gold, silver, and platinum. One of the main reasons money is considered valuable is because it is used to store value for the future. However, governments today print more and more money to finance their public spending. That's why financial experts recommend investing in something valuable that is scarce and cannot be easily created. This is the main reason why the wealthy have a portion of their portfolio reserved for precious metals like gold, silver, and platinum. Just like gold, silver, and platinum will always increase in value when inflation peaks. Before the 1950s, an ounce of gold could be bought for $400. In 2023, the same ounce is trading above $2,000, and according to gold forecasts, it is supposed to rise to $10,000 in 2032. In other words, in about 10 years, your gold investments will be 5 times higher than they are now. So, while cash keeps declining, gold keeps rising. Similarly, other precious metals are better than having cash in the bank. Number 2, industrial commodities. While one of the reasons why precious metals are called so is because they are, raw materials have a natural utility value, and this makes them indispensable industrial products. For example, silver is used in the production of medical equipment, electronics, nuclear reactors, and so on. Similarly, other metals like cobalt, nickel, and copper are in high demand in industry due to their natural properties that cannot be easily replicated with alternative materials. Since 2020, the demand for cobalt has skyrocketed, especially due to its crucial role in the production of batteries for electric vehicles. However, not everyone can invest large sums of money in acquiring raw materials, nor can we store them physically or find the right buyers. So, investing in shares of mining companies like Rio Tinto, mining-focused investment funds, or even derivatives such as futures and options are excellent ways to obtaining such exposure. Number 3, safe haven currencies in today's world of foreign exchange. During the Eurozone debt crisis in 2009 and the global financial crisis of 2008, significant funds fled from these countries to Switzerland to avoid wealth erosion due to currency depreciation. During the recent crisis between Russia and Ukraine, when the United States imposed sanctions on Russian energy trade, Russia conducted transactions in Swiss francs. Therefore, top currencies like the Swiss franc, the British pound, and the Chinese yuan are a great store of value. Number 4, sovereign guarantees. Have you ever taken a close look at the dollar? It says, "This note is legal tender for all debts, public and private." Since 1971, when President Nixon abolished the gold standard, the dollar became legal tender under US law, and the rest of the world began to trust it. Although no fiat currency in the world is backed by gold or any other physical asset, it is still considered to be backed by the full faith and credit of the government. In other words, your money is only as stable as the government that backs it. That's why investing in sovereign guarantees is a valuable store of value. The government of any nation is always the last to default on its obligations. If the government defaults, the entire country defaults, and no strong government will allow that to happen. Therefore, one of the safest ways to invest in sovereign guarantees is through government securities or treasuries. So, always consider the overall strength of a government when investing in treasuries. In the United States, you can invest in treasury bills and bonds to gain exposure to sovereign guarantees, as they offer better returns than keeping money in the bank and are backed by the strength of the US government in the global economy. Small investors can buy treasury securities directly from the government through the Treasury Direct portal or in the secondary market. Number 5, stocks and investment funds. Treasury investments undoubtedly provide higher returns than cash, but but due to their low risk, they offer lower returns compared to stocks. Moreover, not all stocks carry the same level of risk. In fact, the stock market is divided into two types of stocks: value stocks and growth stocks. Growth stocks, such as technology companies, are riskier because they are based on ideas and technologies with a high potential for failure. However, value stocks like Nucor, which trading in industrial metals, is less risky due to the established demand in the foreseeable future. Therefore, value stocks with solid fundamentals not only offer a consistent and stable price appreciation, but also provide steady dividends. Hence, dividend-focused investment funds like the Vanguard High Dividend Yield Index Fund and the Fidelity Equity Income Fund have a strong track record of dividend payments and are ideal and affordable investment vehicles for investors. Retailers, number 6, land and real estate. Accountants consider land as a non-depreciable asset for a very valid reason. It is scarce and always in demand. Since the beginning of time, land has been one of the world's most valuable resources. We need land for housing, schools, factories, agriculture, and commercial spaces, among other uses, and with the growth of the human population, its demand will never decrease. Similarly, residential housing, office spaces, and commercial properties built on land are also always in demand. Therefore, both land and real estate act as excellent hedges against inflation in your investment portfolio. According to a Bloomberg study, home prices have tripled between 1992 and 2020, despite the significant drop during the 2008 real estate bubble. So having exposure to the real estate sector is always beneficial when the dollar begins to lose value. However, most small investors only consider entering the real estate sector much later in their lives because they only think of real estate in terms of the home they live in. While owning a fully paid-off home is a net worth goal for when you're in your 40s, having a slice of real estate in your portfolio is also valuable. Contrary to common belief, you don't need a lot of money to expose yourself to the real estate market. You can invest in REITs, real estate investment trusts, or real estate investment funds, which are similar to mutual funds, but in the case of real estate. One of the most popular REITs in the United States is Ventas, Inc., VTR, which invests in real estate for the healthcare sector, such as nursing homes, research centers, hospitals, and more. Alternatively, you can take out a loan to own rental properties. Your rental income will cover the expenses and mortgage payments and will also yield profits. Number 7. Collectibles. In the case of a regular car, its price depreciates by half from the moment it is put into circulation. However, with vintage cars, similar to wine, the calculations are reversed. They appreciate over time. In fact, according to Autocar, a 1955 Mercedes-Benz 300 SL Gullwing Coupe was sold in 2022 for a whopping €135 million. Only 2 cars of this type were ever produced, making them rare collectibles among car enthusiasts. Similarly, in 2017, Leonardo da Vinci's most controversial painting, Salvator Mundi, was purchased for a staggering $450 million in a Christie's auction by a Saudi prince. The reason why the wealthy spend significantly high amounts of money on limited edition products is that these unique pieces serve as temporary stores of value that can reach unimaginably high prices if the right buyer is found. However, for the average investor, investing in collectibles may seem like a distant dream. That's why online markets like Whatnot are fantastic options for selling baseball cards, comics, action figures, and much more. And if you can't buy it all, you can invest in partial ownership of collectibles on platforms like Masterworks. However, I'm going to introduce an asset to you that will be perfect, but you'll find it in this video.